Sanjay Barwani is the CEO of Economies Capital, am I correct? In New York City. He has a deep understanding of capital markets in Brazil, the rest of Latin America, and India. Sanjay is also an expert on risk management and derivatives trading. Previously, he was part of the management team of M. Stafford and Company, an asset manager. He received his bachelor's in business from the University of Mumbai, and he has an MBA in finance and management from the Wharton School. To your left, Barani Boba is a partner and co-founder of Baseline Partners. Baseline targets investments in the range of 15 to 20 million, 25 million, with a preference for small and medium-sized companies that are based in and or leverage the Indian market, both public and private, to provide goods and services in industries that are the building blocks of developing economies, such as power generation, logistics, telecommunications, and healthcare. Mr. Boba joined Merrill Lynch in 1997 after receiving his MBA in finance from Duke. Prior to business school, he was an analyst at Chase Manhattan Bank from 92 to 95, and he received a BA in economics from Georgetown in 92. Mr. Roger Frank is Chief Marketing Officer of and helped found Innovair Advisors in 2009. Innovair manages investments in small to medium-sized companies in food and agriculture and emerging and frontier markets, including Africa. Prior to that, he was a partner at Developing World Markets, which assists in funding microfinance institutions and other socially motivated organizations through international capital markets. For his work there, he and his team won a Fast Company Award in 2008 for pioneering new models to finance social innovation. Prior to DWM, he spent 20 years on Wall Street, where he was one of the first U.S.-based investment professionals to work in international emerging markets. He began his work in Africa in the early 90s, and he received his bachelor's in fine arts from the University of Delaware and an MBA in international finance from NYU. Dr. Eric Wu was born and raised in China and has years of experience as a China-focused investor and financial advisor. He's currently the managing director of NYPC, a China-based private equity fund, which has about 500 million RMB or $80 million in management. NYPC has invested in 5 pre-IPO Chinese companies since early 2011. Prior to this, he was the vice president at New York Pacific Capital, a boutique investment bank focused on raising capital for small and medium-sized companies in China. And prior to that, he worked as a financial advisor to healthcare companies at Amber Asia Capital Partners. Mr. Wu has an MBA in finance from NYU, a master's in statistics from the University of Chicago, and a PhD in genetics from Texas A&M, and he's fluent in English and Chinese. So I always jump in to the first question. We'll just go right down the line, left to right, my left to your right. What's the focus of your current fund? What is your current fund interested in with respect to investments in any diverse countries, or the ones in which you specialize, and why?
I'll start with that. And first off, thank you, Bert and Joe, for inviting me to speak, and thank you everyone for coming. So we focus on Brazil. We're a Brazil-focused fund of funds manager. So we don't invest directly with companies in Brazil. We actually find network managers in Brazil to invest with. We have an office in Rio and an office here in New York. Our focus is typically on finding investment opportunities that have to do with the growth in the consumer space in Brazil and the domestic demand in Brazil. We tend to stay away from investment ideas that have to do with growth in uptake of like commodities and government-like investments in Brazil. So that's what we focus on, Brazil and fund of funds.
Great, thank you. Thanks, Joe, for hosting us today. Barani Baba with Baseline Partners, and our focus, as you heard in the introduction, is in India from a geographic standpoint. From a fund-specific standpoint, we're somewhat unique in that we work with a small consortium of hedge funds in the U.S. And I mention that only because we originally went to India and focused primarily or exclusively on private equity opportunities, specifically growth capital, in similar to what Sanjay had said, in domestic demand-driven type of industries. So despite my background being an IT BPO, which is really more of a phenomenon of Western development, we're really focused on things like logistics, infrastructure, etc. What has happened over time, and I've been in India for 5 years now, is we migrated to the public market strategy as well, and really that was an outcome of from our vantage point, the private equity market was a smaller opportunity set than we had expected, and for a variety of reasons, specifically to where we were playing, we couldn't get comfortable with valuations or what have you. So we migrated to public markets where, obviously valuations are, printed every day. And by looking at a broader set of opportunities, we found that to be a better opportunity set for ourselves.
Well, the fund that we're managing, the Food and Fiber Fund, makes it easy to describe our focus. And given the concentration in Eastern and Southern Africa, our specific niche is really the agricultural value chain. I know more about silos, extruders, processors than I ever wanted to. But from the point of view of good solid businesses with good cash flows, with good collateral, by financing the agricultural value chain, one, there are a lot of very exciting opportunities in terms of return. But two, a lot of the models we feel in agricultural production are broken. Yields are going down, they're very resource intensive, and we're working with a lot of what's called climate smart businesses, which are using new techniques, new technologies, and increasing yields in food production.
Our fund solely focused on Chinese companies. So we started from 2009. It's an R&D fund. Basically, we invest early stage 20% and 40% on growth capital and 40% on pre-IPO deals. So nowadays in China, most private equity funds are chasing the pre-IPO because we still a lot of opportunities there. Our focus is aligned with the government policy and also the high growth of the Chinese consuming sectors, including the healthcare and consumer products. Also, we like to invest in clean tech, like for the future, also aligning with the Chinese government, because the government usually are putting a lot of effort promoting this energy efficient clean tech kind of technology. So that's a brief introduction of our fund.
Thank you. So now we know a little bit about your interests. Could we have each of you discuss what you see as the major macroeconomic and or political trends in the BRICS country in which you focus? And number one, how does that affect the overall investment outlook there? And two, what types of companies would you like to invest in the near future?
So I think I'll start again. In Brazil, what we see is that there's, and I'm sure this kind of theme is echoed in the other emerging markets as well. Our focus is typically on investment themes that echo the rise in the middle class. And what we're seeing in Brazil, they break out consumers into different segments, typically from A, which is at the top end, to E at the bottom end. And what we're seeing increasingly is that there's a radical shift from consumers being in that D and E category, where they have very little disposable income, moving into the C category. And we see new businesses being formed and being taken to market that cater to that C category, essentially in industries like healthcare, consumer goods again, like things like education, like entertainment, and so that's a major theme. What Brazil has that's slightly unique, I guess, from the other emerging markets is in 2014 the Soccer World Cup is happening in Brazil, and in 2016 you have the Olympics. So you have these two sort of big events happening, kind of like coming down the pipe. And what's happening in the country right now is that the government is is out there building infrastructure to cater to these events. So infrastructure is a big thing for us as well. And that's a really interesting area in Brazil right now. What's interesting though is that Brazil was significantly, the Brazil markets were affected by the global slowdown and by events in 2008 and 2009. But what we saw with a lot of the companies that were focused on consumer growth, they were still doing quite well, like posting good numbers, even the valuation growth. So we try and find those opportunities. So, beyond that, what's interesting, what's happening in Brazil now is that unemployment in Brazil historically was around just shy of 10%. Over the last 2 or 3 years, unemployment, like last year, it was recorded at like 4.7%, which is significantly lower than the US, in fact. And 2012 was a slight increase up to 5.5%. So what you're essentially seeing is you're seeing this, like developing countries behave a lot like a developed market, and that's essentially the trend that we're looking for. We try to stay away from things that are commodity focused. Like Brazil has a lot to do, in soybean exports, iron ore, like that sort of thing. We try to stay away from that because that's more tied with global flows and things like We're focused on domestic kind of consumer growth, and we think that's a good secular trend that should take us for the next, God knows how many years, but at least for a while.
I think everyone or anyone in this room who follows India probably would have the same summary of the macroeconomic and GDP outlook in general, similar to mine, which is very murky and challenging. I think I personally think that's somewhat of a helpful backdrop, because I think anyone who has followed India for a long time would rightfully state that nothing is new there. I think there's different waves of optimism and pessimism. I think we're probably getting to a point where there's a fair amount of pessimism, which I'm hoping is going to drive people out of the market, so the people who are there longer term are actually going to have a better opportunity set. I would say from a high level, though, I think there was a group of people, investors 10 years ago, who had less concern about this. And as a fund, this is something we talk about a lot. When you were focused on IT, BPO, and pharma, it did not matter when you had effectively a hung government at the central or the state level, right? Because you didn't have to rely on someone like we do now in the hydropower business to get you permits and clearances. That's a huge issue now. And so I've seen in our own business, permits and licenses for fairly minor stuff go from 3 weeks in 2007 to now 3 to 9 to 12 months. And so you just have to plan for that now and think about your business differently. So I think Brazil has infrastructure issues, India, and I don't understand those issues, but in India we have infrastructure issues. I think what it ought to teach you is that 9% goal that India has, I think it's really challenging, and if you're investing for that, you're never going to get there. If you go back to a more realistic outlook, I think you will be, I think you'll be pleasantly surprised, because I think the one thing, irrespective of any business we've invested in, is if you can execute, the demand is almost endless. Going back to the middle class, if you can actually get a good to market, whatever it is, a good or service, you're going to be pleasantly surprised. I think the challenges now are greater than ever to get that good to market.
Ronnie, just a quick follow-up on that. You said a hung government. Explore that a little bit.
Well, there was a big election there was an election in the largest state, and it didn't quite go Congress's way, which is the leading party, and so we'll have to see how that settles out. But the majority, India is like the British parliamentary system, and so you need to form consortiums, and that's there's a question mark around that. I think everyone would have a different view. I think it's going to be it's going to be a challenge.
Okay.
Discussion over drinks, I think.
Okay.
Indian political system.
Gee, it's not just unique to India. South Africa, and we'll start sort of with the outlook, building on those last comments. I would describe as positive but bumpy. Positive on the economic side, bumpy on the political side. Obviously a very complicated social history, and as soon as that sort of starts to reappear, clearly it has a direct impact on economics. So it's simplistic to say growing well, strong economy, increased consumer demand, but the country really can't escape from its roots. I think a couple of key trends I'd like to highlight. One, increasingly South Africa in particular is a regional hub. You really have about almost 60 countries in sub-Saharan Africa and a few various regions, but when it comes to the southern part of the continent, clearly increasingly South Africa is a major hub. Secondly, what's driving the economy is an improved infrastructure, whether it's ports, whether it's roads. It's just a lot easier to do business these days. Third, without question, as we've seen from my previous speakers, increased demand from consumers who have more money. And finally, increasing globalization. Clearly, as a global commodity exporter, they're very directly tied to what commodity prices are doing around the world, but then you have a second economy which is really here more locally, and you sort of have a tension between globally what's driving it and what's driving it locally. In terms of future opportunity, frankly, we're pretty excited by what we see. South Africa, some of the regions around it have some of the best uncultivated cropland in the world. So with respect to food production, and by not just the water, the people, the resources, there's some great opportunities in terms of addressing some basic needs.
I think China nowadays also face the similar challenges as described in other BRICS countries. So recently, government adjusted down their projection for the GDP growth to 7.5%. In the last 8 years, it never lower than 8%. One of the issues is, for the last several years, the high growth is kind of consume a lot of environment, and also the structure of the economy is not quite efficient. So the government try to adjust down the growth, but improve the efficiency of the economy. So and also because the exterior of the environment also changing, so the Chinese the economy try to drive up their internal demand compared to more like relying only on exporting before. So our take is our investment theme try to catch up this changing of the Chinese economy. So basically try to focus on the companies have higher margin compared to before only on the mass production. Companies having better more IP protection, and also have a stable cash flow will be our focus of investment.
And just briefly, sort of related to that, what can you tell us about valuations in the BRICS country in which you specialize, particularly as compared to those in the U.S. or any other region we should talk about?
Sure. So, so valuations are a little bit mixed. I mean, you see that some of the large cap firms in Brazil have now reasonably high valuations. But if we look at the market, it still has, like Brazil has GDP growth in the region of around, expectations of around 3% next year. So it's not as high as, say, India or China, but the expectation is that in 2013 we'd see higher GDP growth in the region of 4.5 to 5%. So valuations are quite compelling. The general kind of market index, like Bovespa, is now finally back at sort of pre-crisis levels. So in some ways, it is quite it's like similar to what we see in the U.S. if you will. What we focus on is finding those small cap companies and kind of nano cap companies, if you will, or we actually hire managers in Brazil who understand that space really well and can find valuations in kind of small cap and nano cap. And to what Varani was saying is that we focus on the public market. So anything that's listed is something that we would be interested in investing in, because that's just a much wider landscape. And you can get companies with reasonably small market capitalizations, and you can find them traded on the exchanges or get them to market. So that's a really interesting space. And in fact, for the small cap, nano cap, we find the valuations are very compelling right now. There are risks, of course, but we'll get into that later. Sure. Lots of risks.
India sounds somewhat similar. When you look at sort of the named index, the Sensex, on a PER basis, it's about 15 or 16 times based upon what you think the estimate is. The forward estimate is. India continues to trade at a premium to other Asian EMs. I think more than ever that's undeserved. And so that's my comment on the valuation with respect to large caps. I think importantly though, it sounds again similar, when you then go to the mid cap index, that's half. It's a 50% discount for a variety of reasons. Liquidity is one of the major technical reasons, but from our vantage point, the mid cap space is much more attractive on a public market basis. Because of the mid-cap being at such a large discount, we're finally seeing some private equity valuations that have come in more in line, because obviously those then, in theory, ought to trade at a discount to the mid and small cap public valuations. So again, on the large cap side, we don't see much value. On the mid and small and the private equity side, we're actually seeing some value.
Most of our focus is primarily on the smaller and private companies, and I'd say valuations are fairly reasonable. One of the things that makes our life easier is there's not a lot of capital around. Like the rest of the world, the banks in South Africa are particularly constrained and focused in on the large corporates, which means companies in our niche, which is typically mid-sized, need the capital and people are willing to make a deal. One of the things that we find is we have a sort of a variety of financing techniques. We do a lot with preferreds and convertibles and warrants, etc. Given the lack of availability of capital, we do a lot of structured credits with equity linkages, which makes it easier for the borrower and gives us the kind of attractive returns that we're looking for.
For the Chinese stock market, the Shanghai index is kind of at the PE like 50 now. For the more small company like Nasdaq kind of exchanges about 25. So it's becoming down a lot. Last year it could be like as high as like 50. For the private equity, the entry valuation is still quite high. I think the valuation, compared to the secondary market, is still too high because so many private equity funds chasing a few good deals. For us, we try to avoid, paying too much premium for this kind of investment by, moving down to the early stage deals using our industry background to, make a much more reasonable entry valuation.
All right, very interesting. So now could each of you please tell us a little bit about some recent, at least one good investment you made in BRICS countries, and anything interesting about your execution of that deal you think of, and B, how the investment has performed.
Right. So for us, last year we were able to identify a really interesting equity manager that was focused on really the micro-cap space in Brazil. So really small cap companies. They were a domestic manager raising funds domestically. We were able to work with them to actually get their fund set up and available to international investors. So that's worked out reasonably well. That's an interesting story for us. Since we don't actually invest directly with companies, we're finding managers. Our focus typically is on finding good managers who have left bigger platforms, like either a bigger bank or a bigger asset manager, to set up their companies and are probably managing around say 60, 70 million US dollars or so. So they have some scale, they're a functioning business, but they're not extremely large. And they're able to find us the kind of unique investment opportunities, and also they're not constrained by capacity. Like for many of these really like the smaller names that we like, the capacity is an issue. So you really can't put like that many dollars against that investment. So for us, I think it was the manager we found last year. Came up, I think, as a bit as a surprise, but by having a team on the ground, we were able to work with them and deploy some capital with them.
I'll talk about the hydropower investment that we made, and from a structuring standpoint, Joe actually helped us put that deal together, so he did a great job. Thank you for whatever that's worth. And it was complicated. One of my colleagues used to work at Shell Petrochemical for many years, so power was a space, and is a space we know very well. We focused on hydropower in India because we didn't have to worry about feedstock, which has become a big issue in India. We all focused on the Himalayan region with respect to the feedstock here, which is water, obviously. Interesting from the standpoint of the company was earlier stage because it was the only value we could find, and so we were actually able to set up a structure around it all the way through to a Delaware LLC. Typically not allowed in India. If you have an Indian private limited set up, you cannot do that. There's a host of issues that come up when you do that. That makes it taxable. In our case, we were able to set it up with Joe's help to have a Delaware LLC. I will also point out the issue. I mean, I pointed it out. I alluded to the issue with respect to getting clearances and approvals. One thing we did early on when things were going in a different direction is we focused on an area of the market that no one cared about, which was small hydro, 5 to 25 megawatts. And there we're finding, because no one cares, it was much easier to get stuff done. That was one. Despite that, I come back to the biggest lesson I've learned in India and investing over the last 5 years is know your promoter. And even when you think you know your promoter, you probably don't. So in our case, I knew these two guys since I was a kid and had been in India, and I had to fire one of them, which was a challenge, but sometimes you have to do that. The person who remained, we then hired a professional team around him, and we were able to take a company that had 15 megawatts to, now 15 megawatts of licenses to now, above 100 operational. So it was thanks to him and thanks to some really talented people we were able to bring in.
Well, having spent a number of years on Wall Street prior to the launch of our fund, I spent a lot of time doing work, particularly in the mining sector in South Africa. And the stories really go on both ends of the spectrum. I don't know if anybody knows what a kimberlite is, but it's sort of a geological formation which shows where a diamond might be. Well, I can show you the scars from the company that didn't find any. I can show you the returns from the ones that did. Particularly in that sector, as was said earlier, you really need to know the players. I mean, I think my batting average would probably wouldn't get me into the Hall of Fame, but I've had MVP years, and I've had years where I would have been in AAA ball. It's the nature of the beast, particularly when you're working in some of these markets. That's why, frankly, to have somebody like Joe and his colleagues is so important, because not only do you need the operational details to be clear and as transparent, but the regulatory and legal environment isn't always as crisp as one would want it. So we find whenever we're doing some analysis on a project, it's essential to have a good team of partners on the ground who can help with some of the regulatory and legal issues as well.
So, as I mentioned before, one of our focus is like the clean tech and the energy savings. So one of the examples I want to mention, last year we invested in a company in Beijing. It's a high power voltage transmission company. Basically, this company is part of the smart grid program in China. So one of the things we're doing in China is collaborating with the local government. The government have this guidance fund. So the government would like to invest a small portion of the money into the fund. At the same time, they will introduce some of these good projects to the fund. So this project we introduced from the Haidian high-tech industrial zone. So what we do is introducing some of the technology from the management team in the U.S., helping them to streamline their operation. The company is growing very well. Last year, they actually their revenue grows like 3 times. So one of the issues investing in China now is for some of these very good deals, it's very hard to really get in. Lately, we look at the medium company. The company is actually, they don't really need the money because they have a lot of money in hand. What they need is a good name of the investment firm to help them to go IPO. So actually the CEO told them there are like 20 private equity funds chasing them, including Goldman Sachs. So ask us what we can do, bring to them. If we, bring something like, if we know somebody can help them to smoothly go through the IPO process. So that's the realistic situation in China. So basically, you have to know the company very well, either add value through some technology introduction, or you have to, have some connection with the government to help them to go IPO smoothly.
All right, sounds like some success.